The best systems have basically things in place that prevent you from trading, because when the market becomes extremely clear, that's when you want to go down into your entry and actually trade it. And the problem with most people trading is that they ultimately kind of exist under this understanding where they think that because a pattern is happening, a real move is being presented. So they take the opportunity, and sometimes they win, sometimes they lose, but they have no idea why something is leading to a positive outcome or a negative outcome. And overall, when you put together 1,000 trades or 100 trades or a year of trading, you just get poor delivery and performance. Hey, how's it going, guys, and welcome to mentfx. So my goal with this video is actually going to be to provide to you as much as humanly possible in one video that you can go and execute right now for yourself and start getting better at without any further follow-up, email provision, pay me for this or that. None of that necessary. I just want to give you a system that you can start using now, and one that's going to do a lot more for you than all the stuff you learned before. And let's just get into it, right? So recently, and honestly, every single week or so within the private team, we've had people get funded over and over and over again with firms, with prop firms, with Forex firms, with futures firms on their own funded accounts, right? Let me go into here. Like, you have a number of this happening nonstop, right? So it's been, you can pause this and look at it, but ultimately what happens is many people trading any kind of time frames are finding success or some element of success with their prop accounts, with their funded accounts, with their personal accounts, with their stock accounts. And it just goes to show that the concepts and knowledge that's going to be taught even to you guys today right now is being utilized every single day by people just like you, and they are moving from no understanding to some understanding to real understanding to proper data and confidence to actual execution. And I want to give you some of those rules today by looking at a random market at a random time and walking you through the exact same things that these members are doing so you can start utilizing it yourself as well. Now, on this channel, I've made a few videos recently about my own personal higher time frame system, where you might have seen some of the trades that I'm kind of taking, why I'm taking them, the rules behind them, the management behind them, and what that looks like overall for the data collection and for an overall increasing equity curve. Now, I want to speak to a lot of you that are much lower time frame traders. Some of you are truly looking to just trade lower time frames or just trade on specific assets. What I've noticed is a lot of people want to trade on like NQ. A lot of people have been trading on GC. And I think what I'm going to do today is I'm going to start our discussion and provide you a full system using GC. So GC very simply is XAUUSD, gold, however you want to call it. So gold or GC are all the exact same thing. They are just traded amongst different platforms and brokers. Their delivery is a tiny bit different. You might see some more wicks on one, some less wicks on another, but ultimately we're just looking at gold here. And what I want to do is I want to bring you to an entry time frame that would be, let's say let's just say you're entering on a 10-second chart. So for today's video, what we're going to be doing is we're going to be assuming that your entries are on a 10-second chart. Now, personally, I don't do this, but I'm going to walk you guys through exactly how I would approach this so you have the exact tools you need to go do this yourself. So if my entry time frame is a 10-second chart, there is a very specific formula that I teach my team to follow to decide whether something is worth trading or not across multiple time frames. It is known as the EVC. So V is another time frame, and all we do is we multiply the entry time frame by 6. This is a general number, but if you do that, you'll get to 60 seconds, which is about 1 minute. So what this means is that for the most part, at this given moment, if I am to trade a 10-second chart, I want to align and make sure that a 60-second V validation time frame is aligned for the actual move before I look to trade the 10-second. The problem with just deciding one time frame to trade, so if you choose just a random time frame, right, 1 minute, I want to be a 1 minute trader, a 5 minute trader, I want to be a 15 minute trader, a 1 hour trader, it doesn't really matter. If you choose one time frame, the problem with that is anytime you go to any market on any chart and you go to the 1 hour or whatever your time frame is and you just look for the entries, you are going to guarantee that over time, you will be chopped up on moves and you're going to get the moves wrong because you have no buffer. You have nothing stopping you from actually getting involved. The best systems have basically things in place that prevent you from trading, because when the market becomes extremely clear, that's when you want to go down into your entry and actually trade it. Otherwise, if you're trading anything and everything, so if you have learned a simple a very simple entry criteria, you know, double top and you want to sell it, or double bottom and you want to buy it, or you get a head and shoulders so you got to sell it, or you have a trend line buildup so you want to buy it, whatever it might be, it doesn't matter ultimately, right? Because every single pattern is nothing more than a demonstration of something that's happened. And the problem is if you're just using a pattern with nothing else coloring it, you are guaranteeing that you're going to be taking random entries 24/7. And the problem with most people trading is that they ultimately kind of exist under this understanding where they think that because a pattern is happening, a real move is being presented. So they take the opportunity, and sometimes they win, sometimes they lose, but they have no idea why something is leading to a positive outcome or a negative outcome. And overall, when you put together 1,000 trades or 100 trades or a year of trading or a month of trading, you just get poor delivery and performance. And the problem is that when you have a misunderstanding about how the markets operate, and then you try to trade them, you become emotional over each outcome because you don't know what you're doing to start with. So if you don't know what you're doing, right? If someone tells you, hey, go cook me a medium rare, perfectly basted filet mignon steak, right? And you go and try cooking it and they give you no instruction. No matter how you do it, no matter what you do, you're going to become frustrated, you're going to become emotional, and you're going to fuck it up. You're going to screw it up, especially if you get one chance. Similarly in trading, if you don't know what you're looking for, or you don't understand what a trend or a proper cycle might look like to the delivery of an action, then of course you're going to get emotional trading random patterns. So instead of coming in here and telling you, like most people, like most mentors will do, and say, there is one true chart setup you need to learn, and once you understand this, you're going to make so much money. Instead of coming here and telling you that there's a pattern, what I want to do is I want to come here and tell you that there is a cycle that prices follow. And if you allow yourself to trade within the cycle and then trade the pattern within the cycle, you're going to make an unbelievable amount of money. And if you made it this far already in this video, you're already ahead of most people because most retention drops off as a result of squirrel brains. So if you're still here, you do not have a squirrel brain, and that's an amazing start. And I'm going to give you exactly what you need right now. So the EVC is simply a time frame based approach to entries on anything that you're looking at. So if we're entering a 10-second chart and we multiply that by 6, we get a 60-second chart on the V, which is equivalent to a minute. And then we can also use the C, which is a 10x multiple of this time frame. So that will bring us to 600 seconds, or otherwise known as 10 minutes. So for the most part, the three main time frames we're kind of going to be using to decipher if something is worth trading or not are these three. Now, if you're part of the private team, you know that you can take this a step further, especially if you're trading a super low time frame. You want to kind of establish yourself within maybe a higher time frame context. But even if you're not doing that, this is ultimately all you need. You want three general time frames that you're using to basically look at the orders coming into the market and allow that to be the deciding factor of whether you should watch something or not. So what I'm going to do now is I'm going to actually jump down into a 10-second chart. Let's just assume you're trading a 10-second, or we can even up this. It doesn't really matter. We can honestly do anything. So if I go back to the hourly here just for a second, okay, I guess we're not doing that. So what I'll actually do is I'll step down. I'll actually use you know what, 10-second is fine. We'll use a 10-second for the entry. And I want to show you what a day-to-day could be like. Now, what I'm going to do for this exact video is I'm going to do exactly 3 days of action, and that's it. I don't know if it's going to be a profitable, a losing, or a break-even video. All I know is I'm going to be doing 3 days of action, and I'm going to be showing you exactly how I would approach trading a system, or trading this EVC system, through trends to get behind action and actually make money, okay? Or go break even or whatever. I just want to ultimately show you what it looks like to manage your trades. Because again, just because you trade for 3 days does not guarantee you're going to be making a profit. It might even guarantee that you might be down a little bit, or you might take a bunch of break evens and nothing else happens. That is completely normal and actually part of the system of trading, especially when you're trading one asset or you're trading a very low time frame and you're just taking trades, right? This will also not take into account slippage, commissions, and everything else associated with trading a much lower time frame, but that's something that you should all be cognizant of and aware of as you trade your own systems. So what I'm going to do is I'm going to click this replay mode, and the first thing I'm going to do is I'm going to click random bar. So this is going to randomly take me to some time where the 10-second chart was available, so we can of course trade it. It looks like it took us back to the 10th of January, perfectly fine. And the first thing we're going to do is we're going to start off with our higher time frame system, our higher time frame C, remember, because we're trading, let me actually put it right here. I'll do an anchored text. I have the EVC. We have an entry of a 10-second, a V of a 1 minute, and a C of a 10-minute. This is the general approach today. And this will be our trade results along the right-hand side, so we can see kind of where we lead with this. But we're gonna start with the 10-minute. Now, something that I suggest all of you do and learn to do for yourself is understand when a market is liquid. All that means is look at the volume, right? So this is actually called the volume ment. You guys can add that, or you can add it through an even simpler form, like through the trading view stuff. But ultimately, just simply highlight where volume is present. So look at this, right? Volume, volume, ends, right? So volume throughout this time, no volume throughout this time, right? Volume, volume. Volume, volume. Go back and just do this. You can do this for any asset, and this is why it's so powerful. And now look at the times. This is around 7 a.m. till around, 3 p.m. This is around 9 a.m. till around 3 p.m. This is around 5 a.m. till around 1 p.m. This is around 6 a.m. till around 3 p.m. So we, for the most part, should have an understanding that the most liquid times, or the times that money starts to come into this market specifically, is around that 5 a.m., 4 a.m. mark till around 4 p.m., 3 p.m., 2 p.m. Of the United States, New York time zone, which is EST. This is the time zone that the world pretty much operates on, especially for most US markets, and most of the market in the world is US based, okay? So cool. We know for a fact now that the times we're going to be generally trading are going to be around that, that like 5-ish a.m., 6-ish a.m. based on what's happening with the actual asset till around 3 p.m. Great. So what that means is that the first time we're going to trade is probably somewhere around this time here. I'm just going to mark out 5 a.m. and I'm just going to allow price to play to that point, because that's where I'm going to be interested in the action behind this given market, in this case being GC. So as we come around to that time, there we are. Also, for anyone that needs to know, let's get rid of the volume here because it's not really important. We might make it small. I just want to see when volume truly comes in, because we want to know that volume is behind the market. But for any of you watching this, we're using the mentfx structure premium set to this right here. If any of you do not have it, if you're watching this as a free kind of trader on here, all you want to do is you can go and add the independent MAs. The beautiful thing about having this tool is that it only counts as one indicator, so you don't even need TradingView Premium to technically use it. But these are the 4 EMAs, the 3 EMAs I'm using, and the 1 SMA right here. That's these colors right here as they're set up. And then we also have the range lines set to the period range. This is simply just a range based on a number of candles, so very, very simple. But you don't necessarily need it. I just use it for visual preference. And honestly, while we're here, I'll even get rid of the models down here, so it's not in the way and you don't think that you need it for any reason. And we just have an ATR right here. So instead of having like an indicator of it, we just have a number of it. And I use this personally for my own stop placement, okay? So here we are coming around the 10 minute to around when we open, right? So the question right now from a context-based, so C, with the 10 minute, from a context-based time frame is to simply ask ourselves, is this currently in a stage 2 delivery, or is it not doing anything worthwhile? Now, what we mean by this is that markets move in stage 1s and stage 2s. Stage 1s and stage 2s. Simply think about this as sideways is 1, move up is 2, right? So this is ultimately the simplest version of understanding how price moves. What I'll actually do is I'll open up the private course material here to show you the image while that opens, so I can demonstrate this a little bit better. But for the most part, and you probably heard this other places, prices go through consolidation into move, consolidation into move. Now you can add more things. I've heard people use all sorts of weird shit to describe this. Some people call it random, like buy and sell model. Some people call them manipulation to move, or I don't even know what people do. But the ultimate simplistic version of price is that you move through stage 1s and 2s, and that's it. And the best markets move through stage 1s and 2s that are ultimately very, very clear, right? The best demonstration of this, to just give you an example like image to think about stage 1s and 2s, is to understand that prices don't necessarily do this, right? If I was to tell you that prices do this, then anyone in their mother could make money trading, right? It would be very easy to make money trading, but that's not how markets actually tend to move. Instead, markets tend to move a little bit more alongside what you'll see up here, which is that the stage 1 and 2 is a blueprint. It's a map to how the markets move, but it's not a guarantee, right? So you can see that if you really think about the stage 1s and 2s as we draw them, they're actually a little bit more displaced in terms of how they look. And if you look at the actual action might be a lot more volatile within their movements. So the general thing to understand is that we're looking for stage 1s and 2s. So if I was to ask you, are we currently in a stage 1 or 2, right, on the context time frame, you could say a number of things, right? If you were to try to draw, you'd have stage 1, 2, right? 1, 2, 1, 2. You had this longer term 1 into 2, longer term 1, and then it kind of broke down, and now maybe it's in a 1, 2, maybe 1, 2, very kind of choppy, right? But right now, if I was to draw this out, I believe, looking at this, looking through it as normal stage 1, stage 2 kind of approach, that we are currently in a stage 1, and we haven't really made a move from out of the stage 1, which means that I am not going to look at a lower time frame. I'm not going to look for an opportunity on any lower time frame or on my actual entry time frame, because this is a market that is currently in complete static mode, in complete back and forth mode that's not going to do anything. It's important to identify these kind of times, because if you don't know how to identify that price is in, let's say, a consolidatory range or a stage 1 range, what's going to happen is that any trade you take is going to be met with losses. To give you an example of this, if I'm entering a 10-second chart, which is what we're doing, and your trades look a little bit something like this, where like if I sold here, my stop might look something like this. So let's just copy this across, and let's go back to the 10-minute, right? That kind of trade, if you take a look at this, that kind of trade randomly placed. So if I just go boom, 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 okay? So now sells, because again, if we're randomizing what we're doing, if I place these random sells at any of these points, that would be a loss. This would be a starting winner that then becomes a loss, or if I entered here, would be an instant loss. So again, all I want you to do is think about these points as trades that you're taking for the purpose of getting into a trend, right? So we're just making them bigger. I want to get in because I want a trend to establish. So if I take sells at any one of these points, right? Any one of these points, any one of these points, any one of these points, you can notice that if I randomize my entries and I'm looking for good entries, when I'm entering into a stage 1 or consolidatory state, the thing that I'm guaranteeing is that I am being stopped out. This is the easiest way to lose money. This is where most people lose money. They don't understand they should stay out of the market. They don't understand that they should be literally waiting for a move to happen to actually trade. And they try to trade anything and everything. They try to enter the pattern, not the actual context of the move. And as a result, they get stopped out and chopped out of every single trade that they personally take. So when I look at this, the first thing I want to do is I want to establish that the context time frame has begun some kind of valid move to some direction. At the moment, we don't have that. So all I can do right now as we enter whatever session this is wait. And all of a sudden, you get this breakout out of a stage 1 to move into a stage 2. In this case, it's actually a bearish move. So we're currently in a bearish environment on the context time frame, which means this is our first step to step down to a 1 minute or a validation time frame and decide if the market action here is worth trading. And similarly, you can approach this from a stage 1, stage 2 perspective. That can be the starting point for anything you do. This is simply distribution, delivery of distribution, redistribution, delivery of distribution, redistribution, delivery of redistribution, redistribution, delivery of potential redistribution, right? So what we're looking for is we're looking for the stage 1s and stage 2s to align with what we're seeing across that higher time frame. At the moment, when I look at this, I don't see that. The way that I teach my team to think, let's open up the mentfx private mentorship material here again, is very simply in this way right here somewhere. In this way right here. Okay, you can pause this if you want. You can read over this if you want. This is all taught in the private material. Again, it's all available to you guys. You can literally read it right now if you want. But for the most part, this is the entire cycle of what I'm looking for. On the momentum cycle, which is what we're looking at right now for the V and the C, you can see the numbers right here, and not the letters right here, V and C, so this is clearly what I want to look for. The general thing I'm looking for is for stage 2s and stage 1s to occur, and most importantly, the stage 2s to be clear, and the stage 1s to do what? To come to the rising averages. So when I'm in a stage 1 like this, I want to see price that comes to the rising averages, to these ones right here, or to the falling averages. If I was to flip it, you'll see them rising, just like that. I want to see it come to the averages without failing. Right now, it's failing, right? Which means that we're just sideways. So this is a market environment that I, again, would not trade. I would have to wait for a move on this that is consistent with what I would want to see in a market that's delivering. So now what we have is we have a 10-minute that's already been described as being bearish, which is good. We have a defined thing there. And now what we also have is we have a move that starts a stage 2, goes into a stage 1, and is happening at the falling averages in this case. This is exactly what I want to see in terms of price, which means that this right here on its own can become an area that is worth trading for a potential entry. And that's ultimately it. So what happens is price wants to now seek this low and beyond, right? the next stage 2, if it was to happen, will clearly seek this low as per all the orders that are trapped and are trying to get long on this potentially, and are going to want to go here. And the really cool thing about this is that notice how when you're doing this, you're not selling off of some kind of random zone that you maybe pinned out or found out at some point on the left. And you're also not looking to the left and going, okay, where can price stop? Maybe here or here or here, right? Most traders exist under this interpretation of price, where they want to see price stop because they put a level on their chart and they want to prove that it's going to stop rather than allowing the market to prove a direction. And what we're doing is we're ultimately just saying, price is moving in a way that is now proving direction, so we want to be behind this move. The same thing is true for things like NASDAQ over the last few months and weeks, or whatever you want to call it. What I'll do is I'll show you it right here, right? Price doesn't stop because of some place on the left. Notice something important. Price didn't even have a place on the left to stop. Price had never been this high, right? A lot of traders that don't understand what's going on end up creating a false blueprint of price when they try to randomly draw points at some place to decide where it's going to stop, instead of understanding that because we've now moved into bullishness, right? Price wants to seek the high, seek the high, seek the high, and seek the high. Because when you're seeking the high, these become buyable opportunities that become potential reward, and they're happening without stopping for any reason. Whereas other people are simply sitting there constantly waiting for price to pull back to a point, pull back to a point, pull back to a point, and they're trying to get long during these times here, thinking that it's going to be the thing that shapes for them. And as they get into longs, they're trying to look for shorts, right, at all these points here. And instead, as my team knows and as I've done personally with my team, during these points here, we've been the most bullish we've ever been on NASDAQ. This was from around September up until December and then onwards. And we're still bullish on this thing. And this has been in pure delivery state. And again, the delivery is through highs, not to some random zone. And it's important to remember because when you start understanding how trends work in the fact they want to take out and keep moving because they create stage 2s, you stop thinking in terms of, oh no, price is extended, it's going to stop. Because that's not how price operates. Let's go back to GC here. Let's go back to the 10-minute, I think we were on, right? Or we were actually on the 1 minute. Let's go back to the left here. So again, the approach isn't to understand where price might stop. It's more so to understand where price might begin a move, because that beginning of a move could result in pure delivery. And that's exactly what we want to do, and that's exactly what we want to look for. Now, during this time here, if I was to actually jump up to a higher time frame, right? Something that's really important is that if I'm looking at this, and we've been following this for a while, something I just discussed a second ago is that for a system that's much more lower time frame oriented, I think it's very important to still put yourself within the realm of where the higher time frame is operating. What I mean by this is, instead of going through an EVC that just goes up to a 10-minute, I actually push people that are lower time frame traders to align further. So align it with a 60 and align it with maybe even a daily or like a 4-hour and a daily. Because what you want to do, especially when you're lower time frame trading, is align as much as possible, because when you're wrong on a lower time frame and you're wrong a lot of times, you're actually taking a ton of potential chop outs and losses, right? So this is a market that me and the team have been watching for a long time. For the last year, just so you guys know, we've been extremely bullish on this and have been able to trade this thing bullish so many fucking times, it's unbelievable. To make this even clearer, I think, yes. So this is, I'm actually happy I have this open, but this is a member that literally made most of his money and passed a certificate and passed everything watching gold, a well-contextualized instrument. And what I mean by that is an instrument that has proven, or an asset that has proven to keep moving and delivering in a certain way, and has been extremely one-sided. He has used a lower time frame to operate within it, but he's allowed a higher time frame to basically allow him to decide whether or not he's going to be trading on any given day or not. So what doing something like this means is that you're going to reduce the amount of opportunities that you're going to be taking instantly, right? But the cool thing about this is that you are guaranteeing that when you're entering, you have a very solidified idea as to where the price is moving overall and whether it makes sense to trade it or not, right? Because again, even think about this right here. During this period here, I assume that many people are waiting for here to long, here to long, here to long, here to long, and here to short, here to short, here to short. This is how most people operate in the markets, because again, they think based on only existing action, not on the action that is to come if a trend is positive. Now, in this case here where a trend was positive, one of the main things me and my team were doing was looking for price to seek these highs and these highs. in the form of stage 1 moving into a proper stage 2 that wants to take out all these highs. So again, notice how if price is to stage 2, what does that mean? I mean, anyone that's trading anything zone-based has nowhere to have a zone because price has never been this high, right? Which means that anyone doing that is going to lose a ton of money if prices do deliver. So keep that in mind as we're looking at stage 1s and 2s. But this higher time frame, very simply, is one that is extremely consistent with that of a very bullish market or a sideways market. So during this time, there may have been a reason for me not to even touch the market to start with. So just keep that in mind as we start watching this action. Let me get rid of this right here. We don't need that. But this is where the market is, right? So again, we started by looking at this and saying, yes, we kind of moved into a distribution here. So there is a chance that price continues on this distribution even for a little bit. But the question now becomes, is it worth taking multiple potential entries, especially on a lower time frame, in a market that is already proven to be already extremely bullish along the higher, has proven to be bullish along the higher, and is currently moving into what appears to be a very bullish state, right? So price had moved into, again, same thing, stage 1, into a stage 2 that is now in a bullish state. So right now we know that we're in a stage 1 correction, but the stage 1 correction or sideways movement is in the knowledge of an already bullish established market. So the question here simply becomes, if you are lower time frame, is this an area where you want to get short, or is this an area where you want to sideline to get long later, or to just sit out? And that's a question for the person watching this, right? It's not necessarily the fact that you should care, right? Some people are going to make money on this move. Some people, this move is likely to happen. If it does, someone's going to make a ton of money on this move here. But the question now becomes simply for you, confidence-wise, is this something you want to execute upon, or do you want to wait? Now, personally, with my system, I would want to wait here. I would wait for the alignment of even more timeframes to be there for a lower timeframe based entry. So here I wouldn't do anything, and I would simply skip this action. Now, notice something important. Skipping this action still meant a delivery and the correct approach or analysis to the price, right? Because remember, what I'm doing is I'm teaching you how to analyze price through 2 cycles, and you can simply have a good understanding of how prices are going to move based on those cycles, and you can actually make money on them. But the question now becomes, where are you going to choose to enter? Is the action clean enough for you to enter? Is a delivery of the existing stage 1 and 2 clear enough for you to get behind it? These are the questions that make a truly profitable trader. Profitable trading does not come from, where are we? Where the fuck is my thing? Here it is. Profitable trading does not come from randomizing your entries and taking random patterns here and there and hoping you get them right. Profitable trading comes from the personalized, independent decision from the person themselves, from you yourself, the unique person themselves, with the confidence they've established through thousands of hours of repetition to decide, I am happy to take on a risk here and take the loss given that it's a losing trade, right? So you come in knowing that you're going to lose a trade, but it's a good trade. And when it becomes a better trade and as it works, then you make money from it. And then it also means that when you see a trade like this happen and then deliver without you, you can simply look at it and say, I am happy that I understand how prices operate. I'm happy that I understood the price was going to do this. And I'm also happy that I stayed out of it, even though it delivered, because the action was not clear for my kind of market and my kind of entry, okay? So the game of trading is simply a game of personal decision and confidence rooted in multiple thousands of hours of confidence building. So this is an example of where, and again, I want to really stay in. So if we're just trading gold or the future of gold or XAUUSD, I want to really keep in mind the times that we're looking at. So we're still on Monday. Wow. We're still on Monday, but I want to show you that, just because we're trading a lower time frame does not necessarily mean we're taking all the fucking entries in the world. Because sometimes the best lower time frame entry is one that's actually aligned with something that's higher time frame based. Because a lower time frame opens you up to a lot more action, that is also affected by illiquidity, rollover, market closes and open during the day and after the day, red news. So ultimately you don't get guaranteed moves that are going to sustain themselves. These things will affect the way those moves happen, which means that you want to make sure that a lot of things are on your side. At least for me, I want to make sure that a lot of things are on my side before I look to execute something, right? So even though this market here, and I walked you through it, is in a clear stage 1, stage 2 delivery, is in a good area for potential entries, and is now delivering, and on a lower time frame has actually maybe created deliveries, despite all of that, I chose to stay away from it as a trader due to the overall context of this market, which is still very much the fact that we are in a bullish context on a bullish moving market. So I'm going to wait for that alignment. Let's go back to the 10-minute, and we're going to keep track of every day so we know how it looks like to actually be a day trader based on the everyday action of price, right? Stage 1, stage 2, and there's your bearish delivery, right? So again, this is the bearish delivery we spoke about. This is the momentum cycle to the downside. So if I just simply flip this so we can look at it on the upside, what we have here, if you really think about what's going on, is we have a sideways market that moves into an accumulation MB. All of this is taught in the private mentorship with a lot of depth, but I want to give you guys as much information as I can in this video without boring you, right? Accumulation MB. So if I was to label, an accumulation MB is simply a move out of a stage 1. That's exactly what we saw here. That's these labels that you see on my charts. Accumulation MB, we moved into momentum MBs, right? And what's happening right now is that price is simply moving inside of these momentum MBs to the upside. Moving these momentum MBs to the upside. And that's exactly where my understanding that price was going to deliver bearish and provide opportunities within a bearish state. Because remember, guys, on a 10-second chart, I want to make this very clear. These are all entries. These are all entries. These are all entries. For a lower time frame trader, this move alone could be 20 risk to reward multiples of reward on their risk, 30, 40, and multiple opportunities of that. Again, same thing here. The question simply becomes, is it worth for you to trade it, or would you rather stay out? Now, the reason that I'm choosing to stay out as a trader, even though in this case the EVC of just this time frame right here aligned, is because in the scenario that the market does return to being within its overall current bullish and higher time frame delivery, and its overall current, let's go to a 4-hour, and higher time frame delivery, if this is to retain its move, right, and we don't get this shorts right, what's going to happen is we might get a pause, or we might get a start of a move higher, which means that allocated to a lower time frame, those same entries that may have appeared to be good here could lead to chopping back and forth. And again, as a lower time frame trader, because I know there's going to be many opportunities across many assets, I want to make sure that I am trading the clearest possible opportunities and taking risk in the clearest possible areas, because it allows me for me to take my loss quickly, or for me to be in a managed position that's good that can lead to a very large winner. Okay. And again, notice how we haven't even taken a trade yet. This entire test today can end as only losses, and I will upload it because notice that I have taken 30 minutes, and this is, you know, I don't edit these. I don't get rid of these videos and cut them up. I put them out to you guys in full so you can see the thought process as we look at something, so you can understand that I'm sitting here missing trades nonstop, and I'm okay with the fact that I'm missing trades because the trades are not aligned for what I want to see. So very importantly enough, learn to miss most of the action in the market, and you are going to do phenomenally for yourself. So we do start this bearish cycle, and I'm not interested in it because I'm still awaiting a lineup of what I already know I want to see. Again, stage 1, stage 2, stage 1, stage 2, stage 1. Expectancy is stage 2, but if it wants to stage 2 upwards, that may be a true contextual accumulation out of that move, and then we can start to move higher. And that's exactly what I wait for as a trader, okay? There's your stage 2 lower, new stage 1, another stage 2 lower maybe. Doesn't matter. So notice how even though on this day, I could have potentially made a lot of money shorting this market and getting into shorts, it is not worth my time or my capital to do that because I want alignment. And in this case, if your only recipe for alignment is just the EVC up to the 10-minute, then these are valid trades that are good for you to trade, for you. They might not be good for me or the next person or the next person or the person that's trading like this, but they are good for you. This member himself, I believe, only took longs, and this sharp increase in his entire equity curve, especially during a time where you can see, you know, he had a lot of pause time. Maybe this downtime or this pausing time was specifically during these moments here, when price was not doing anything, or not doing anything in terms of what he wanted to see. And when it returned to being clear, he did very well for himself. And in this case, a well-contextualized instrument, in this case, which was gold, he's able to now get funded. And this member is now funded, which is amazing to see. So I wait, and there's nothing I can do. And again, we're coming around to that 1-3 p.m. area, which is around there, which means that on this given day, a whole day of trading, I would have done nothing at all, personally, okay? And we wait. Now again, I'm probably only interested in price once we reach that 4 or 5 a.m. mark. So again, now it's a goal of just waiting for this thing to establish a move for itself and then create a market environment that is worth playing for me. As we come around to the next session that I would be trading, what do I see? See a stage 1 into 2, maybe a 1 that's into 1. It's trash, right? It's not moved into any stage 2. And most importantly, it hasn't moved into a stage 2 above the moving averages. So in this case, this is a waiting game. This is a buildup of orders. I don't care if it makes big wicks up or down. It doesn't matter, right? Because the market is about waiting for a very specific moment to be met to actually get ourselves involved. Moves in distribution, it's still in distribution. So I wait. Stage 1, and it's still in distribution. Big wicks, just like we spoke about a second ago. Does it matter? No, right? And now again, we're moving kind of into stage 1, maybe stage 2. It's very ugly action, right? But all of a sudden we get this push higher here. This is the first time that price has proven or created some form of accumulation within a market that has already proven to be extremely bullish on a higher time frame, right? The higher time frame moved into an accumulation here and has paused now on the rising averages in the form of a momentum MB, which means that right now, everything about this is signaling this. So the same way that you just saw a second ago on the 10-minute time frame, we saw kind of this buildup signal this. We're now seeing the same thing happen on the daily, which means that we're now aligning a higher time frame to a potential lower, because a 10-minute has now moved out of a stage 1 and started a stage 2. Does that mean we're going to be taking trades? No, not yet. But what it does mean on this given day is that we can start watching the 1-minute action for an actual market that is worth trading, right? So price then moves out of this stage 1 to 2, goes through 1 to 2, 1 into 2. Now it's in 1 to potentially start at 2. This is the kind of action I want to see to get behind a move, because now I have alignment for a multi-time frame market move. And if I am to start labeling this, we have this accumulation MB here. I'll make it a different color. Momentum MB. All I'm doing is I'm labeling these right here now. Momentum MB 1 on the rising averages, right? There it is. This was an opportunity to trade, but I didn't take it because I was not certain of my 10-minute yet. Momentum MB. Momentum MB. And now this momentum MB is happening just at the rising averages, which means that the next step could be move higher, which means perfectly enough, the 10 seconds should now begin to provide or create entry opportunities on the entry cycle. So now if I move this over to the only other cycle I teach my team, this is what is known as the entry cycle. Here it is. Very simply, in the formation of a higher time frame momentum MB, which is when price pauses on the rising averages, price on the entry time frame will flush out and begin to create buyable opportunities through highs. That's it. That's the entire system. It might seem very simple, and it actually is. It's 2 cycles, but the question becomes, do you have the consistency to show up every single day, to be patient around markets that are not for you, and to take opportunities when they present themselves and take them with happiness and the ability to take that loss with no problem? So right now, when I look at this, right, I see a clear flush. What do I want to see out of this flush? I want to see a buildup of demand. If that can happen, I will more than happily trade an entry. If it doesn't, there's nothing for me to do. And here it is. This is a perfect buildup of that exact demand I talk about. Now, this is a trick and something I've only taught in the mentorship so far, but this is a thing called the E micro. The E micro is not necessarily used for anything other than positioning for a better trade. This is where you can take a 10x or 30x multiple. We only have access to 1 second here, so we'll go to 1 second. And you look at this action here to decide if it's something that you can trade. But very simply, the same thing I've taught before, this high is what price wants to reach for. This is the high that price wants to liquidate for the purpose of creating a stage 2, because infinite numbers of sellers are now getting involved. Now, I don't know if it's going to actually happen, but I want to give you the thought process behind it. So when I go to a 1 second, what we should see is we should see the a gray high here, which we do. You can see it's very hard to see, but there's a gray high right here. That's the mentfx structure range lines. Okay, I can make this like a blue, so it's very, very clear. But there's this line right here. And very simply, like I said a second ago, highs become buyable. So right now, the only highs I see that could be buyable is this high here and this high here. That's it. But what's beautiful about this is, because this is now a systematic and simple way to enter prices, is you can now enter price through that, protecting a good bit of price below. I'm looking for an entry. Now let me show you that on a 1 minute. When we go to a 1 minute, take a look at the ATR. It's about 1.1. This is set to 1.5. So I tighten that up to about 1.1 because I usually look for a 1x ATR multiple on my entries. Same thing here. So these are two entries that I'd be willing to consider through the 10-second setup. And all I'm doing is I'm using this much lower time frame with the range lines here to assess a buying point that is very, very clear and can start a move. So very simply now, if price wants to tap me in, it'll tap me in, and then I can partial or move to break even and let the move play itself out. So I don't need to take this higher one yet because this one is valid. And let's see if we can get a trade entry here. So price comes lower first, and then taps me in right here. Beautiful. And I'd probably have my stop here because I just use a low. Okay, so we actually get tapped into this trade through this long. That's a lower time frame entry I'd be happy to take. And now it's a game of management, okay? So there are a few ways that I would go about managing a much lower time frame trade, or honestly any trade. I've been doing a lot of testing with this too. One of the ways is to partial 50% right here and leave your stop loss so price can play around and then go or take you out for a loss and a break even overall, or for price to start a move, pause, move higher, and then move to break even. So I'm going to do either one of those. I'll show you that in action right now, based on whatever happens. So what I'm waiting for right now is for price to move higher first, if it wants to do that, or lose and stop me out, just like that. And what we can do is we can actually record that as a loss, because that's it. There's nothing more to that than the fact that we just took a loss. And we can move back to the 10-second, which is our entry time frame for a lower time frame, and ask ourselves if this market is still in a valid area to keep taking long. So notice this. What we did is we entered through the accumulations performed and created by this move here. That's this right here, right? If we want to label it, we can. Stage 2, flush, entries. Stage 2, flush, entries. That's it. We were doing that on the assumption that this is the move that was going to start, and it didn't. There's nothing wrong with that. We've done everything that we should have done to get potentially involved in a trade. And we're going to keep doing the same thing, right? Because we are in a market cycle and environment that is worth trading. Now, when you trade a lower time frame, you also need to be cognizant of the fact that you might be wrong multiple times, which means that on any given day, I can set a rule for myself. I will take 3 losses max. Okay, this is something I used to do when I traded a lower time frame as well. Because the problem with a lower time frame is you do get not infinite, but a ton of opportunity. And if you take every single one, you open yourself up to taking many more losses. And you don't want to do that for yourself. Okay, so you want to make sure that when you take things, if you are consistently working out to the fact that they are not working, you don't want to keep on taking random entries. Now, again, same thing happens here. When I look at this, right, what do I see? I see this is a buyable high, because again, price is moving to this high, and the point is to probably take it out, or this one. So in this case, I'm more than happy to take a long through this high, because we have the formation of an accumulation that is clear enough. Protect the low. Same thing goes. Nothing different about this whatsoever. Look for an entry. And price fails down. There's nothing to do. We go back to the 10-second chart, which is our actual entry time frame. And we allow it to tell the story of whether there should be a buy or not in this market. That's it, okay? We're around 10:30 a.m., which is a liquid session, so we're more than happy to trade it. Let's take a look at this on the 1 second now. Right? Still, this high looks the cleanest. I don't see a reason to buy anything here. Moves higher and pauses. This high now also appears like an area we could be buying. So I'd set a buy stop. Throw my stop under, check to make sure that's a good amount based on the ATR. Let's look at the ATR of the entry time frame, which is 0.4. This stop loss is 0.7. I think that's fine. Usually 1 to 2x is pretty good for an entry, so we'll be fine with that. And the same thing happens. If we get tapped in, which we do not yet, this would not tap us in because we're looking to enter 1 tick above. So that would tap me in 100%, so I would be under this point. Now we're in this trade, same thing happens. Either we take a loss and there's nothing to do, or we start a move that we can partial for 50%, or it gives us a reason to break even somewhere here. So I'm gonna look at where 1 to 1 is, just there. Probably set it 1 tick above and see what happens. So we wait. That's a second loss on the same day. So we're at 2 losses now on the same day. And while that's happening, a third setup becomes very clear through this high. So this would be the third setup I'd be willing to take on this given day. 1 tick above, set the stop below, see if we get tapped in. We pause, and then we do get tapped in. Look at 1 to 1 with a tick above. This is where we'll take 50% off. I'll show you why in a second, but this is management. So we'll see what happens here. And we actually take 3 losses in a row on this day in the same area. That's it. This is all I would do on this given day, even though everything was aligning for a good move, right? In this case, there's nothing more that I can do. I go back to the 1 minute. I'll re-identify where I am. You can see that in this case, we got chopped out of this position, and I'm simply sidelined now until the next day, which would be somewhere around, go 10 minute, which would be somewhere around the next 5 a.m. of the next day. That's it. I allow myself to walk away because I got it wrong when I'm on a lower time frame. The risk management will become the most important thing in the world when you're operating on lower time frames, because on lower time frames you have so many potential opportunities that you need to force yourself and force a rule to walk away, or you could chop yourself up into absurdity if you keep on trying to trade it. Now, we know the higher time frame here is delivering because we saw it. We know this is the momentum MB of the higher time frame, and the idea is that price will reach for this if it is bullish, but we don't really care about that. We are approaching the next session. It looks like as we're approaching that session, volume's already coming in, which means that we can start trading a little bit earlier since there's clear volume in this market. And again, we're going through stage 1s and 2s, 1s and 2s, 1s and 2s, 1s and 2s. And we're actually in a very clear area right here for price to continue moving higher. So at the moment, everything is aligned for bullish. Let's look at the 1 minute. The 1 minute has just dropped into distribution, which is perfect because distributions lead to accumulations, which means right now this distribution is for the purpose of hopefully starting a move like this. Let's see if we can get that. Beautiful. Absolutely perfection. And we move into an accumulation right around here. So what this means now is that we expect that price will now pause for momentum, start moving higher. Same thing. This is what I would expect for this given session, which means that, again, opportunities on the 10 second are going to become valid inside of these areas if we can start to pause down into these rising averages. Price seems to just be taking off without us. That's perfectly fine. If it doesn't give us an entry, there's nothing we can do. But then price begins to pause right on the rising averages. Now, I have a rule I teach my team. And the rule is that I want to see at least the 5 EMA cheat code get met. So I'm going to wait. Because for me, it's a very important rule that the 5 EMA cheat code at minimum gets met. When prices do this, I actually expect them to refail back down like this and then build the setup to take us long. So the 5 EMA cheat code doesn't get met there, which is perfectly fine. There's nothing for me to do except for wait. And then the 5 EMA cheat code does get met here, and we are likely at momentum MB2 of the move, right? So again, I am looking for a cycle that's playing out that is clear in reference to what I know is true for momentum cycles that are worth trading. That's it. And in this case, we are more than happy to trade this momentum cycle right here. So I drop down into my 10-second chart for watching for an entry. And we have this high right here that wants to get ran on. Let's take a look at what that looks like on the 1 second. Yep, looks really good. We can just buy a stop through that high. That's that exact high. Throw the stop under, look for a long, see if we get tapped in. So price does tap us in, beautiful. And again, as I was telling you, management is everything. So I'm gonna go for the management style that is a little bit different from what you might be used to, but it should give you an idea as to what you can do in your own management. So we'll look for that 1-to-1 minimum. So we wait for whatever is met first, the 1-to-1 or a move higher. Nothing happens here, just kind of plays around, nothing happens. Again, this could just be a loss then. It doesn't really matter because again, all I'm doing here, and I will upload this even if I take 10 losses, 15 losses. I want it to be very clear to you what it looks like to trade profitably and what it looks like to trade with an edge. You need to move away from the idea that each independent trade should be like this genius fucking trade that should be a winner, because it's complete nonsense. Each trade is a good trade if you're following your rules, and each trade and its result is worthwhile if you know that your system is going to make money over time, which ours will, because we are following a set standard that we've practiced, that we've tested, that we know is going to lead to good trades over time, okay? A very nice and beautiful loss. Let's take that loss. Now this is the next day, so we'll do it like this, so we know what day it is, but this is the next day, right? Look at the 1 minute again, and I'll show you guys. Take a look at this. I mean, sorry, the 10 second. All we did on the 10 second, ultimately, is we buy stopped through this point right here. That's all we did, right? And in this case, we didn't manage a break even, and it came down and stopped us out. That's perfectly normal. And yet we are still in a very clear flush, and we can very clearly still set up a move on the 1 second. And like, I wouldn't want to be using 1 second, but it can set up on the 1 second to take a long. And take a look at this, right? Highs become buyable points. So all I'm going to do is I'm going to set up a buy at a buyable point either here or here. This is preference. One tick above, throw the stop, under some kind of point below. See if we get tapped in. Pauses. Now it creates this as a buyable high. And it fails down. Let's go back to the 10 second. And let's watch this action again. Once it loads, so we can see our MAs. There we go. Very nice. Let's make sure the 1 minute is still on the rising 10 or 20. Take a look at that. Price falling down to the rising 10 and 20 perfectly. Still beautiful momentum MB. More than happy to trade it. Jump to the 10 second. In a bullish market, in a bullish context, that's bullish and established, which is very good to see. 10 second. We have the buildup of potential accumulations. Let's look at the 1 second for buyable highs. That's all we're doing. Now, the only buyable high I see here, right, because these are just moving lower, is this one right up here. So that's all I can use right now as a buy, so I'll wait. What we can do is we can set up a long here with a stop somewhere here and allow this to basically show us what it wants to do. Okay, we finally make another buyable high right here. Set up a stop on it, see if we get tapped in. Beautiful, we have a place to move our stop now, just under this low. Very weird to look at this on the 1 second, but again, remember, we're not using the 1 second for an entry pattern. We're using the 1 second to establish a buyable high, right? The 10 second is what established the market cycle that was worth taking an entry on. So we get tapped in, and again, same thing, 1 to 1, put a tick above. That's where our 50% will be, unless we get a break-even rule. So right here, as price moves, actually, I wait for at least one more proof. So pause. Move higher, beautiful. So here's where I take my stop loss and move it to break even. Now notice, nothing has happened yet, and I'll actually have my break even at this point. But already this price is at break even, which means that now I've reduced my loss from a -1 to a 0, just like that. And if price keeps going, then great. Then we'll get a partial on this thing. So this would not be a break even yet. The break even would be set at this exact tick value of 2701.2 exactly. So again, it's very important. That's why you have to be very honest with yourself and clear with yourself when you're doing something like this. Comes down, this would stop me out for my break even or 0. Now again, like I said a second ago, we're not considering slippage or comms or whatever. You guys can do that for your own trading. The reason I'm doing this specifically is to show you that a lower time frame system is executable the exact same way as a higher time frame system. You just need to make it very clear for yourself what you're looking for. Now, this high looks really, really good. Let me show you that on that 1 second again, right? Again, we're thinking about buyable highs. Take a look at this high, very much buyable. Just using those gray lines to establish where I could buy. Happy to buy, see if we get tapped in. Looks good. Still looks good as a long right through that high. Fails down, take a look at the 10 second. Here's your failure down. Let's take a look at the 1 minute. Yeah, so fails down. This is now in distribution, right? So the stage 1 moved into a distribution, which means now we have to wait for the 1 minute to reestablish itself on the bullish side before we can trade it again. Move higher and pause just above the rising averages, which is perfect. So this is now creating a new MMB1, which means that the next steps are hopefully a move higher. So we'll take a look at the 10-second. And I don't see a reason to trade this just yet, so we'll wait. Beautiful flush down. And hopefully we come up and start building a little setup up here. Let's see. Beautiful flush down. Get a little move higher. Perfect. I was going to say this high can act as an entry. Let's take a look if that would be the case on the 1 second. Yep, more than happy to do it. So again, looking for viable highs. So again, I'm simplifying the way that you actually look to enter your systems. We'll enter 1 tick above, throw the stop under, look for our 1-to-1 and a tick above for our partial. So we wait, nothing to do, nothing to do. Yeah, there's nothing here, it's just kind of sideways. This would not count. I'd wait for it to get beyond this, so we wait. Again, and if it wants to lose off of that, that's fine. It doesn't matter. The point of this is to give you very concrete examples of being patient and waiting for your rules and then trading them, okay? So what's happening now, if you take a look at this, is we're building up another buyable high, okay? So another MB buy stop high that can exist off that higher. We'll throw that buy stop on, we'll throw this below. So what's gonna happen now is if we get tapped into this one, we'll take our partial on this one and have our stop down here. And we'll have no risk on this, and we'll only have risk on this, which is a very powerful thing. Let's just see if we can get tapped in. Nope, nothing yet. Still looks really good. This looks like it's priming for an actual move higher, but it looks like it doesn't do that. And now it's coming down to take us out of that one. So let's delete that one, no trade there. And let's let this thing do whatever it needs to do now. Yep, so this still looks like a great entry up here through this high. Gonna put that back on 1 tick above like that and throw the stop under this point here. Perfect, we can move our stop up a little since it's pausing up here, which is good. And that taps us in. So what's gonna happen now is off of this trade right here, we're gonna take a 50% partial. That's gonna secure plus 0.5 R because it's at 1 R, okay? And we're gonna leave our stop loss here, just like that. So what's gonna happen now is if we lose, we're gonna lose 0.5 R, which will make this a break-even trade. But at the moment, on the first trade, we have a 0.5 R gainer, 50% is still running. So we're gonna record everything and be very honest about what we're doing. And then this trade is now tapped in with a full risk, and our SL would be here on that trade. And we're gonna look for a 1-to-1, just the 1 tick above, and let this thing do whatever it needs to do now. So we'll wait. Okay, so that also meets 1-to-1. And again, we're gonna take 50% off that one too. So the second trade has a 0.5 R gainer, 50% is still running. And now we have both of those SLs established. This is the first trade. This is the SL of the second trade. Okay, just like that. Beautiful. And now what we can do is, because we have those basically, and here, I'm gonna make this smaller. And this was also 50%, 0.5 R. So right now we have 50% running on both of these, which is a great starting point. And this one came back down and started moving, which means I can actually move this SL to full on break even. And this one still has maybe a chance to come back and then go, so I'll leave the SL here, okay? And now what I'm gonna do is I'm gonna watch the 10-second, so let's move to the 10-second now, for the actual accumulations to decide if I should completely take off moves or not, or manage, or whatever it might be. So we're gonna let it do that. So price starts a little nice move. You can see on the 10-second we're in a clear momentum cycle here, which is great to see. We can jump up to the 1 minute, which is our validation time frame, and allow that to tell the story now. MMB1, this is probably MMB2. This would also be MMB2. Maybe we're building MMB3 right now, but we can't be certain until we start to move higher. We have our SLs set. I'll take this SL and move it here as well. Just like that. There we are. And now it's simply a game of letting this thing deliver and create a big moving profit for us on our profitable trades, right? That looks like MMB3. So hopefully that comes in and starts making a move higher just like that. So what we can do now is we can use the 10-second higher highs and higher lows to establish an overall exit strategy on this move. So what I'm gonna do is I'm gonna throw both SLs behind their currently moving, there we go, higher highs and higher lows. Higher high, higher low, higher high. And we're out. That's all it takes sometimes, right? So we didn't get a really nice big mover out of this, which is okay. That's part of the game that we play. But this one gets stopped out at 1.92, but we've already taken off half. So we only get 0.96 out of that one. And this one we only get 0.4 out of. All right, so again, it's not even a good one. We didn't even get a good gain out of this one. But that's part of the game that we play. All right, part of the game that we're actually playing in front of us is the fact that most trades are not going to be these crazy delivering winners. Instead, it's going to be a makeup of good trades executed over and over and over again to create good exits over and over and over again to the point where we actually get a crazy nice move out of a given move. And that's it. So the 10 second starts to go up. Beautiful sideways. This is actually probably a great entry right here. So again, the Bible high, and we have this as a Bible high. So again, I usually would want a lower time from here, but we don't have access to that as a 10-second trader. So we'll set up our stop, look for our entry, and see if we can get tapped in. Okay, so we get tapped in on this move right here. We get in on that tick, and now it's just a goal of seeing that 1-to-1 and a little bit above reached for 50% or a stop out. So same thing as always now, right? We're starting to basically repeat the same rules. Let's go one tick above that, just to be very honest. There we go. So again, we don't need to see this first and second trade anymore since we don't have two trades active. Current trade is up 0.5 R with a stop loss that is still set to this low right here. And again, all I'm waiting for now is either a pullback that then goes or just pause, move, and then I can move my stop loss to break even. Let's take a look. That's a perfect pause. If it now moves, just like that, I can move my stop to break even. So this now guarantees that I'm making money on this trade no matter what, which is great. I can move back to the 1 minute chart to follow this. So because it's MMB3, the assumption now is that if there is a clear trend here, we might go boom, make an MMB4, boom, and we can maybe get stopped out somewhere here. That's probably what I want to go for. So let's see if we can get that. Okay, I mean, this is looking really, really good. So you get this clear move higher. MMB4 maybe starts getting built here. It probably will be in a second. But what we're going to do is we're going to take our SL. We're going to move it behind this candle. And we're going to let it do whatever it wants to do. Building MMB4. So the goal right now is that if this is an MMB4, it's going to make one more move higher, and we can be in it for that last move higher. All right? And it stops us out instead for 4RR, which is a gain of 2RR. There we go. Okay. And that's MMB4, which means that now I don't want to trade this. I would expect that this stage 1 would lead to a stage 2, or just go sideways, and then maybe we'll start a move later that we can trade. And we're at 5 a.m. only, so we can actually keep trading on this day. But notice how if you were trading this day, well, you're going to be sitting here from that 3 a.m. till that 5 a.m. the whole time and onwards, right? So this is very important because when you're trading a lower time frame, people think that you can make time work really well for you, but it's actually the opposite is true. A lot of what you're doing is just waiting, and sitting there in front of your computer waiting for entries. Otherwise, you're... Oh, I'm sorry, I'm going to go back one candle here. Otherwise, you're literally missing trades potentially. So this stage 1 here breaks down a little bit and then starts a new stage 2 here. So this goes into a new accumulation and starts building what I would call a new MMB1. This is now preferential for whether you trade it or not, but I think it's perfectly fine. I think the fact that we haven't taken 3 losses on the day makes this worth watching and potentially taking. So I'm going to look and see what the 10-second looks like at this time to see if there's an entry. And you can see we're building. This is a potential entry. Let's look at the 1 second. Yep, there's your buyable high. 1 tick above, stop below. Taps us in. Look for your 1-to-1. Yep, there it is. It meets it there. So we have a plus 0.5 R. Again, the goal now is to let it pull back, move, and then move to break even. Stop loss is still at the main stop. There's your pullback. Now see if it wants to move higher, which would be really nice to see. So it stops us out, and that would be a minus 0.5 R, right? Because this This would be -1, but we took 50%, 50%. So that works out to being a 0 RR break-even trade. Go back to the 10-second. So that's where we traded right here, and we didn't get a move come out of that, right? And now we're going sideways again. Yeah, this is kind of building up a move, but not clear at all. Hopefully it comes back down now, yes, and then starts going higher again, just like that. And if we look at the 1 second now, we're probably going to see the same thing that we saw before. Buyable high, throw the stop under. We also have a buyable high up here, so we'll keep that in mind. See if we get tapped in. So this taps us in for a trade. We'll look for that 1-to-1 or a little bit above for our break-even rules. See if we meet that. So we wait, and looks like it's just going to be a loss. Yep, there it is. Very easy -1. And now, once again, our goal is to wait for one more -1 so we can be done on the day, right? Because that might be the rules that you're approaching this with. Now, if you don't have those rules for yourself, that's perfectly fine. I personally have those rules for me because, well, they're important to me. This is now in chop distribution. I would ignore all of that. Then it moves into a very clear accumulation, pauses. Wait for a pause. Beautiful. That should be a buyable high here. Yep, there it is. Buyable high. See if we get tapped in. We do. 1-to-1. And again, we're at 2 losses on this day, so one more loss and we're out of here. We're at 5 a.m., looks good. And there it is. Nothing more to do. -1. And I would once again pull myself out of this given day and allow myself to trade again when it's clear again. Again, there could be entries here, there might not be entries here. I'm only interested in trading very particular areas when it makes sense to trade. So again, I'm looking at the volume down here. You can see when volume picks up and what it kind of looks like. You know, most volume is definitely around that 8:30 a.m. time, but that's okay. Because, well, you could even wait till those times and trade these little areas here, and that could be even better for you. But right now what we're seeing is 10 minutes moving clear accumulation, clearly. So 1 minute is already probably becoming clear as well. It was here, it was really nice here, but I missed it, that's okay. We'll wait. Beautiful sideways. Go to the 10-second. You'll probably see the same thing. Nice flush out, move higher. That actually looks like a buyable high as is. Here it is. Buyable high, throw the stop under. Look for a 1-to-1. See if we get tapped in. Nothing yet. Still looks really good though. Buyable high, look for your 1-to-1 with the tick above for 50%. And this is again a new day, so remember that. It's boom, new day. So we wait for that high. There it is. That's a plus 0.5 R. Stop loss would still be here. Let this thing pull back if it needs to or go. Looks like it starts a move. Nice pull back. Move through the high now. Cool. We get to move this stop loss to break even. So again, now I'm going a little bit quicker since we've kind of done this a few times now, and you should understand the general rules. If I am to follow a lower time frame, move to the 10-second. Take a look at what we got here. 10-second starts a very, very nice move here. Let this thing develop. Higher high, higher low, higher high, higher low. What's this low at? Around 2.1 R, so nothing really to do. Just let this move hopefully develop and become a bigger runner. Comes down and becomes a break even. Well, nothing, because we had our stop loss here, so nothing to do. Perfectly fine. Move back to the 1 minute, take a look at where we are. We get that momentum cycle here. We get a breakdown, we're back in distribution. Let's wait for this to move back into accumulation. Moves into small accumulation, then pauses. This is one of those areas where you could get a small entry inside of here if it sets up. Let's take a look. Take a look at the 1 second, see if there's a buyable high. I probably just wouldn't do anything here. Okay, well now there is a buyable high right here. Throw the stop under, see if we get tapped in. We do get tapped in and we instantly get stopped out. So let's record that. This is a new day, this is a -1. Buyable high through this high though, as well. More than happy to try it again. There we go. Take a look at the 10-second, breaks down, nothing to do. So again, we wait, pauses again, That's going to be a buyable high in that lower time frame. I'll show you guys that right now. Again, this is just understanding how prices operate. Throw the stop under some of the MAs, see if we get tapped in. We do. Watch for the 1-to-1. And again, I'm just trying to do the same management for you guys every single trade, so it's very, very clear that you can follow the exact same rules over and over and over again, and it can lead to overall profitability if you allow yourself to follow the rules. Okay, back to the 10-second, nothing to do. Look at the 1 minute. Oh, I should not have been, oh no, we traded because of this move here, right? Okay, that's fine, it's fine. Stage 1, stage 2, pauses on the rising averages, absolutely perfect. Take a look at the 10-second. Yep, look at the 1 second for the actual E micro, take a look at what that looks like. Now again, when I'm trading this on a lower time frame, my system looks a little bit different because, well, there's much more clear action to look at since I'm not trading such a low time frame in this scenario, right? We get tapped in, look for a 1-to-1, but a little bit above. That would be there, by the way, and that's still a -1. That's 3 losses on the day. You know what that means. That's it. That's my daily trading. Move on to the next time. There we go. And we wait. All right, we missed the move. Perfectly fine. That's part of the game. But the beauty of a lower time frame is that you can wait for alignment across multiple assets or wait for a good asset, then trade it. If you get it right, good, you're going to be rewarded big. If you don't, that's fine. You move away. You wait till the next trade. That's it. And we wait till the next day. Oh, the next day was here. All right, well, we skipped that day. That's fine. Who cares? Doesn't really matter because we can trade any day and we can still apply the same approach. So we move into clear accumulation right there as that happens. 1 minute clearly moves into accumulation and goes into distribution. We wait for accumulation now. That's it. Wait for accumulation. Accumulation occurs. We start getting this beautiful pause in reference to that accumulation. Let's take a look at the 10-second. 10-second starts that accumulation. Stage 2 higher. Let's see if it breaks down here. It does. I mean, it's pretty ugly, but this is a buy stop through this high. Throw the stop under, look for the move. Okay, breaks down, nothing to do. Beautiful pause, take a look at the 1 second. Should create a buyable high here for sure, yeah. Nothing there any longer. It breaks down, so we just ignore it. Take a look at the 1 minute. 1 minute failed down. We can wait now for accumulation. We're now into stage 1. We kind of start coming out of that. Let's look at the 10-minute here. 10-minute is kind of stuck in this little range. We'll wait for accumulation. Beautiful. Take a look at the 1 minute. 1 minute makes that 10-minute move into accumulation, breaks out for distribution, and now we're waiting for a momentum heavy buildup just like that. That should be a 10-second entry inside of there. There's your breakdown. Look for accumulation. Breaks down. No really clear accumulation. We'll wait. There's that accumulation we were looking for. 1 second should create a buyable high right here. There it is. Take your entry, throw your stop under, look for your 1-to-1. Again, this is one of the management styles I've been testing, where you 1-to-1 break even and then you leave the rest to run for a potential move. But it doesn't seem like it mattered that much in this one, and it actually made us less money. So it's just something to keep in mind. Plus 0.5R. The rest we'll wait for. Pull back. Move higher. There it is. This stop loss gets moved to break even. Beautiful. Jump back to the 10-second. Higher high, higher low. Higher low. Look for a new higher high now. Look for a higher low. Higher high. See what this low is. About 2.2, so nothing to do. We'll wait for an actual move to come out of this. Higher low. Higher high. Higher low, higher high. Higher low, higher high. Higher low. Yeah, there's just nothing to do here, right? Because again, all I'm looking for is a larger RR multiple to take a partial on. This is not worth the partial yet. So we just let this thing do whatever. and return to break even. Now again, if we weren't doing our break even rule, you know, this reached 5 RR. That's a really nice gain. But this ends up break even, so it's whatever at this point. Go to 1 minute. Clear breakdown, nothing to really do here. Moves back into potential accumulation. Let's take a look at the 10 minutes. Looking very choppy now. 10 minute is now also in the stage 1 chop, so we'll wait for accumulation. There it is. Move back to the 1 minute. 1 minute moves into accumulation, back into distribution, see if it becomes accumulation. Becomes very, very crazy, breaks down, nothing to really do. Move to the 10 minute. We have disalignment across multiple things now, so we wait, we wait, we wait. And I just don't like this, it's just very ugly. We'll probably wait till this 3 a.m. the next day or so. Whoops, around this point here, see if we get there, and what we're doing around that time. Goes into distribution, moves into accumulation, move to the 1 minute. Moves into a stage 1. Beautiful, see if it pauses now, it does. Move down to a 10-second. Here's your minor flush. Watch for it to come a little bit deeper, just like that, let it build up. Watch the 1 second for a viable high. And now you're starting to see the repetition of the exact same thing now, right? This should start to appear a lot simpler and easier now that we've done it a few times. Same thing, buy stop the high. Doesn't let us buy stop it. Move back to the 10-second. Yep, breaks down, perfectly fine. Let's look at the 1 minute, where are we? 1 minute is broken down, nothing to do. 1 minute breaks down, nothing to do. 10 minute probably breaks down too, and we're back in bearish mode. This is probably just gonna fall off now. Yep. Now I move into some potential accumulation here, just taking a look, right? You have a generally choppy market, but it is moving into accumulation. Take a look at the 1 minute. Around 8 a.m. here, so it looks like we're good on the day. We move into accumulation here. It actually looks pretty good for a 10-second potential entry here. Yeah, we don't really get anything. Let's take a look at this. Pauses on the rising averages. 10 seconds should be flushing out, just like that. 1 second should start building up a buyable high. The buyable high here would be basically this high. Let's buy stop that high. Looks good still. Falls down, nothing to do. Comes up. Pauses. Buyable high. That's a double MB off a higher time frame. 1 tick above. Throw the stop under. Throw the stop under. Taps us in. 1 to 1. 1 tick above. Close 0.5R. I think this is a new day, I'm not sure, but it doesn't really matter. Close 0.5R. Let it pull back. Then let it take a move through the high. Doesn't do that yet. I'd give it a second to make a new move here. Very good. Move our stop loss to break even. Head back to the 10-second. Same thing as before. Higher highs and higher lows will tell the story now. Nothing at all. Move back to the 1 minute. You have the momentum MB. You have another one being built right now. So 10-second might start setting up a move here. See if we get a pause. Looks like we do. 1 second should tell a story or a buyable high. There it is. Same thing as before. And we should be bored of doing what we're doing now. Right, because you should be seeing that this is nothing more than the repetition of the same thing. And just because you're trading a lower time frame doesn't mean you are opening yourself up to making more money necessarily, right? You are still simply executing the clearest trades you possibly have in the given moment. Sorry, this was a skip 1 bar too fast. This point, I checked the 1 second. Same thing as always. Buyable high. There it is. Same thing. I know we went back a little, but this is the exact same thing we're looking for. I'm just going a little bit quicker now so we can get more data on the thing here. Close 0.5R. Let it pull back. Let it make a move higher. Good pullback, that's fine. Let it make a move higher now. See if it does that. It doesn't. Comes back for the loss, which makes this a 0. Right. Move back to the 10 second. Move back to the 1 minute. All right, makes a move, fails down, nothing to do. Very choppy. I'd ignore this action now. Choppy, moves higher. Let's see if it pauses now up here. Beautiful pause, 10 second. Beautiful build up, 1 second. Beautiful buy stoppable high. Fails down. Fails down. Fails down. Still good on time, so we can keep watching this. Very bad price action, I'd wait. Beautiful pause up here. See if it pauses a little bit more. We are meeting the 5 EMA rule. Let's look at the 10 second. Yep, this is starting to build up a little accumulation here. See if it pauses. Moves down, pauses, beautiful. That should be a buy stoppable high. There it is. Right through that high, throw the stop under, look for the long. Get tapped in, watch for the 1-to-1. Yeah, we just wait now, nothing to do. 1.12, there we go. Watch for the 1-to-1. Yep, that does get met, so plus 0.5 R. Let it pull back and then move higher. Very slow market condition. Pull back, now move higher through the high so we can make an actual move to break even. So our stop would be right here right now still. This would be an overall break even if it comes and touches and stops us out, but we're looking for a move through this high. Go a little bit faster. We probably will know what that high is now on the 10 second because it's been taking a while. Yep, so we're just looking for a move through this high. Beautiful. Stop loss gets moved to break even. And the rest is a higher high, higher low management. Again, keeping it as simple as possible, right? Higher high, higher low. It's around 3 RR there. That's pretty good. Higher high, higher low. Nice. So that's around 5.62. Take my SL and put it here under the 5.62 R. Now again, I'm waiting for a higher high, higher low, higher high. Just trying to capture the trend here. That's a higher low. Look for a higher high now. Nope, we don't get it. We get stopped out of 5.62 for a gain of 5.62 over 2 is 2.81. 2.81, that's this all the same trade. Take a look at the 1 minute. So we just caught this little move right here, right? That's all we did. We had MMB 1, 2. We're now setting up another move. Nothing wrong with trading that. So let's take a look at the 10 second. Let's see if we start setting something up here. We do, it looks pretty good. Let's take a look at the 1 second. There's your buyable high. There's your stop. We'll look for a 1-to-1. Tapped in. 1-to-1, just a little bit above. Nothing yet. Plus 0.5 R on that move. The SL would still be here. Nothing to do. Template SL. Wait for a pullback. There's your pullback. Move through the high. There it is. Move the stop loss to break even. Go back to the 10 second. Allow the higher highs and higher lows to tell a story. Probably look for something around like 3-5 RR at minimum. Higher low, higher high, higher low. I would not put my stop loss yet. I'll just wait. Higher high. It's around 2.2. I just let it do its thing. What's this at? 3.5, 4.5. I'll wait for a new high now. Nice. And I would throw my stop. Yeah, sure. 3.82 I think is worthwhile. So we'll throw our stop behind here. Higher high, higher low, higher high. Throw our stop behind here. Higher low. Stops us out right there on that wick at 4.91. 2.45 gain. So again, this is a dumb, basic like management style. where I'm not even moving to break even necessarily. I'm just kind of taking small partials and letting the rest do whatever it needs to do. You have MMB 1, 2, 3, 4, so we're probably very extended here. I wouldn't trade this necessarily. I expect this to probably just break down, so I'll wait. There's your MMB4 breakdown. It's good to see. And we're at, what, 10 a.m. right now? So we're still in a valid area. This can easily go into distribution and then start a new accumulation. Let's see if we can get that. That's distribution. Distribution. Moves into accumulation. Pauses. Take a look at the 10-second. Flushes down. Pushes higher. Pauses. Yeah, actually does pause. Probably will create a buyable high. Right here. There it is. Stop loss under. Look for the entry. Nothing to do. Buyable high. Low in place. Looks good. I think this will probably look clear on the higher time frame. I just don't want to get ahead of it so it doesn't show us what happens. Yeah, 10-second looks good here. Okay, taps us in. Let's look at the 1 second here. Oh wow, okay. Look at the 1 second here. This instantly meets our 1-to-1 rule. So again, the entry would just be like this. This instantly meets our 1-to-1 rule. Plus 0.5. Wait for a pullback. That's a decent pullback. Wait for a move through the high. Yep, that's fine. Ends up being a loss. Well, not a loss, but ends up being a 0. Go back to the 1 minute. So all we did there is we traded this little area here and then it became choppy again. Goes back into distribution, so we wait. Distribution, 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 moves into accumulation. Very good to see. Pauses, 10-second. And now hopefully the EVC is aligning and making a lot more sense to you guys in terms of entries, okay? Flushes out, pulls higher, pauses. 1 second to create a buyable high. That's the E micro, very simple. Taps us in, look for a 1-to-1 or a little bit above. Plus 0.5. Wait for a pullback, and then a move higher. There's your kind of a pullback. I'll give it 1 more second. Okay, looks good to me. Stop loss gets moved to break even. Head to the 10-second. Manage higher highs and higher lows. Wait till around 4, 5, 6 RR or so. See if it does that or not. Higher low. Looks like it's going to come take us out. Nope. Higher high, higher low. Just a waiting game now. Okay. Let's see, what is this low at? 5. That's cool. We'll throw our stop down there. Throw our stop behind here. Higher low, higher high. Throw our stop below there. Higher low, higher high. Throw our stop below there. Higher low, higher high. Throw our stop below there. Higher low, higher high. Stop. Throw our stop below there. And that's our stop out. At around 10.12, which puts us at around plus 5.06. Now again, without any of those partials, this would be plus 12, this would be plus 5, this would be plus 6, this would be plus 0.8, this would be plus 2, this would be plus 4. So again, you can see that without doing this kind of 0.5 hour management thing that I've been doing just for the purpose of this video to show you what it means to just follow simple rules. You know, there's a lot more RR we could add to the bottom line, but I wanted to come into this video with just a generally simple system and show you that system, right? Now what I'll do is actually put this into a data collection sheet. So 1, 2, 3, you'll see it right now. Boom. All right, so ignore all this stuff here. I just used the sheet that's available to our team, but what I did is I inputted all the GC trades. I didn't use the correct dates. All I did is I just prorated the dates from first trade to last to make sure it has chronological order. But this is after basically 1, 2, 3, 4, 5, 6-ish days of trading. Maybe a little bit more just because we skipped some days from what I remember. So if I go back to the 10-minute, you know, we started this overall test right here on the 13th of January and we ended it on the 21st. So we spent about, with the exception of weekends, we spent around what? like 7 or 8 days. So about a week of trading, of just showing up every single day, waiting for everything to be aligned, taking very, very basic entries where we're buy stopping highs and managing in a very simple way where we're just taking kind of a 1-to-1 partial, just above, like a tick above, and we're managing the rest with basic higher highs and higher lows. And we kind of expedited and showed you that into the very end. What I then did is I just took this and I just inputted it all across the board here. So the -1s, the -1s, -1, zeros, small win, small win, small win, 0, -1, -1. So I just inputted them all here up until the very recent days or so. And we can now go into the analysis tab and take a look. So after everything, which it might have not felt like, especially if you watch this full video, we're looking at around a break-even rate of around 1/3 of the time, a loss rate of around even half the time, a win rate of less than 1/3 of the time, an average win of only around 2.77 R because we were partialing early on. If we didn't partial, we would double all our winners, as you guys are all aware. So that's just preference. And none of the times that we partialed did price come back and then go. So in this case, it actually would have been better not to do that. We're looking at a compounded return of around 9% ROI. Uncompounded is around 8.96. So basically around the same because we don't have much data. But the data is looking very, very beautiful, right? We have a cumulative R that is increasing now. We have an overall profitable system under our belts. It's around 22 trades. Our entry time frame was actually a 10-second, just like that. And what I did here is I inputted some general RR costs to make it very fair in terms of commissions. But I said for each 3 pips or points, we pay 0.1 R. And of course, the more this goes up, so if we pay like 0.3 R for each 3 points, you'll see it'll reduce our returns. Because when you're trading a lower time frame, you pay more for slippage and commission, right? So it's going to affect it. So like I said at the beginning of this, please make sure, let's allow access here. Please make sure you understand like what your own commissions and slippage are associated with things. But this is exactly an example, or just one example of a way to take what is being taught on this channel over and over and over again, use the exact concepts and cycles used that I use personally on the hires, use the concept of the E-micro to enter, and then management. And very simply how being patient creates opportunity and opportunity leads to gain, right? It's probably the case that when you watch this video the whole way through, it felt like most of what we did was took losses and break evens and very tiny wins. And you're completely correct, we did. And yet, despite that, through simple rule following, through walking yourself through the steps you're going to take and through doing it over and over and over again, we ended up with around a, 8%, 9% gain, which again is an 8% gain over the course of around 7 days. Now, for some people, that might not be enough, but when you start understanding what trading can offer you and what it looks like when you scale your accounts and get better and better and better, 7 to 8% in 8 days or 10 days or even a month is phenomenal. That amounts to maybe around 70% just on a monthly to yearly, around 70%, 80% yearly. If you're doing 8% every 8 days, then you're doing around 24% or 30% every month, which is not even going to be the case. You'll grow your account way too quickly if those are kind of the results you get. But I wanted this to be made very clear because, we started this off and I told you I would upload this no matter what, regardless of losses. And there were days where we took 3 losses in a row, 3 losses in a row, 3 losses kind of in a row, right? And yet, despite all of that, and despite the insane loss rate, whatever you want to call it, we're looking at an overall return that is exceptionally positive, an 8.53% compounded return despite your 9 losses. Let's make sure I got that right. 3, 6, 9. Yeah, 3, 6, 9. 9 losses. Very nice. A win rate of around 27.3% and an overall unbeatable delivering system. And this is not exactly, but this is the exact rules and processes that the members within the team use every single day to trade their accounts and, transform their accounts into positive gains. They allow themselves to take the losses and break-evens they need, and they transform that into gains. And they do that over and over and over again. This is his first day of trading live, 15 second. In this case, much better win rate than even what I did. Yeah, it's awesome to see this. And also, if you made it this far in this video, either you're already part of the team, in which case, thank you for being an awesome person. But if you made it this far and you're not part of the team, join up. I want to meet you. I want to talk to you. I want to see you improve firsthand. And I want to see a message like this from you in due time. Okay? Thank you guys so much for watching. Bye.